So Rule 11 UA gives methodology for determination of fair market value of different assets, including the shares and securities when they are listed on a stock market and when they are not listed on a stock market. That means the valuation of unquoted equity shares, and that is your Rule 11 UA 1CB gives the methodology as to how to value the shares of an unquoted company. Friends, this is very critical and important for every one of us, because more so for those valuation professionals who are specializing in financial assets and securities, because more often than not we do the valuation of unsecure unlisted shares or unquoted shares, and that is where we need to do the valuation as per Rule 11 UA 1CB. And this is where I would like to mention to all the friends who are on this session. Please remember, whenever you are doing valuation under the Companies Act, make sure that the provisions of 11 Rule 11 UA 1CB are also taken into account, because it should not happen that at a later date there is a conflict between the methodology that you have used for the purpose of valuation under the Companies Act and the valuation which is to be done as per the income tax rules. And that is what your Rule 11 UA 1CB is. So this talks in terms, and we will discuss this in a much more detail, clause by clause. So what is the valuation methodology prescribed under the Rule 11 U 1CB? The methodology which is prescribed is referred as NAV, net asset value. But if you really ask me, and I'm sure you would realize as we come to this Rule 11 UA 1CB in detail, you will realize that this, though we call it as a net asset value method, but really speaking this is not a net asset value method. It is combination of net asset value and adjusted book value method. So this method talks in terms of four components of the assets: A plus B plus C plus D. A stands for the assets which are given in the balance sheet. All the assets which are given in the balance sheet other than B, C and D. So what is B? B is the value of jewelry, archaeological and work of art. And what is C? C is the value of unquoted shares. So please remember, it is always possible that the valuation of a company, valuation of an unlisted company's shares that you are doing, that company itself may also have unquoted shares in its balance sheet invested somewhere. So the same methodology will need to be followed with regard to those investment also, and that's your component C. And the component D is with regard to the immovable assets. So and then you got minus L. L stands for liabilities. So this is what this formula is: NAV, that is A plus B plus C plus D. And just to repeat it once again, A is for all the other assets other than B, C and D. B is jewelry and work of art and archaeological things. C is for the unquoted shares of other company, and D is for the value of immovable assets. L stands for the liabilities, but this is not simply liabilities which are given in the balance sheet. These are some liabilities which are to be considered, and there are certain liabilities which are not to be considered. That is what we will discuss as we move forward. So who can do the valuation under Rule 11 UA 1CB? Nothing is mandatory for this Rule 11 UA 1CB, because basically what you are doing is you are doing valuation based on the balance sheet. But the only thing is, please remember, if this balance sheet, if the company for whom you are doing the valuation has got B, C and D, B and D particularly, C is all right, and if you are not an income tax registered valuer, if you are only IBBI registered valuer, then you can handle A, but you can handle C, but you cannot handle B and D. For B and D, and that is jewelry and ornament and sculpture items, you will have to take help of someone who is a registered valuer under the income tax and that is what you will need to do. Likewise for C, you will again need to take help of someone who is registered under the income tax for the valuation of land and building, and that is what you will need to do. Otherwise, there is no restriction as to who can do the valuation, who cannot do the valuation. PB of course stands for the number of shares that are to be valued, and PE is the total number of shares of that company. So this is your Rule 11 UA. Rule 11 UA 1CC is for the determination of fair market value of unquoted shares and securities other than shares in a company. That means what? That means you have done the valuation of equity shares here. So what are the things which are not done, which are not covered, which are covered here? So here you will have valuation of preferential capital, and you will have valuation of other securities like optionally convertible preference share or compulsorily convertible preference share or other such instruments. To them, Rule 11 1CC will be applicable. And what is the methodology that you would need to follow? The methodology that you would need to follow is price it would fetch if sold in the open market on the valuation date, and that is what is the guiding principle as far as the valuation of unquoted shares and securities other than shares in a company. Who can do the valuation? A report from a merchant banker or a chartered accountant would be fine. So in case you are doing the valuation of unquoted shares which are not equity share or which are other securities, then you will need to obtain a report from a merchant banker, or a report from a chartered accountant will also do. Right. So when this is applicable, this is also applicable in case when there is a transfer of existing securities or existing shares. Friends, let us now come to Rule 11 UA2 and Section 5627B, which is one of the most discussed, disputed, controversial, talked about section and the rule. But before we do that, let me throw it open to all of you. In case if you have any question on what we have discussed so far, we will take your question and then we will come to Rule 11 UA2 and Section 5627B.